Morning, everybody. It's the 11th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
How you doing?
Yeah, all good. All good.
Better
I haven't got
yesterday
Chloe
after
this.
your team?
Yeah, I feel a bit better after
Yeah.
watching that last night.
Sailed through to the next round.
Yeah, only sailed through when there's a minute left and we're 4-0 up on aggregate.
Yeah.
That's
I don't think
and
you
you
would
can
have
relax.
capitulated that hard, would you?
No, but then watching the match the night before, I actually thought, God, things can sort of flip on a sixpence, really. I know it sort of takes a few minutes to score a goal. You can't, the old adage of it takes a second to score a goal is rubbish because, the amount of time people waste in between sort of taking setting a kick again.
Yeah.
But yeah, it's still not good. Looking at the defence, they weren't really tested last night, thankfully.
Who have you got the weekend?
You know what? I think we've got a break. So for some reason, I think we got a.
I don't think there's any breaks this weekend.
Is it not? Oh, not sure.
Better not be. We're in my dream team. Anyway, where's Chloe this morning?
Gone to London.
Wow.
Oh,
How was she about that?
That's a second time she's gone back. So yeah, I think she's quite excited to get back because obviously she started a new job.
Sick
so
of
it's
listening
just
to you all day.
yeah, probably. And she's obviously got a new job, but she's working with a couple of people she used to work with, so that's quite good. So, but it's just knowing all the new processes, and I think she sort of learnt quite a lot last couple of weeks ago when she went up. So I think she's looking forward to it. Cool. But then, obviously, sort of like that young lady was sort of killed in
oh Christ, yeah,
on the near the park, and obviously she's sort of like people will think about that then as well.
Yeah, not good. Okay, well,
yeah.
Good luck to Chloe. I'm sure she'll be fine. On to news. So, just going through the headlines this morning. Front and centre, we finally got the bill cleared for the stimulus in the US. So that's going to bring $1,400 direct payments and an extension of $300 weekly unemployment benefits. So clearly, you would have thought that's going to stoke inflation going forward. The inflation figure yesterday was quite tame, so that prevented markets from selling off. Also, yesterday there was a 10-year bond auction, which a lot of people were talking about. It doesn't normally get a lot of press, but if there was a lot of demand for the 10-year in the auctions yesterday, then that would have suggested that more and more people are starting to move into safer haven assets, taking advantage of the increase in the yields on government debt. But that was quite tame as well. There was a lot of overseas interest. But that's, I think, fairly normal, but it wasn't anything sort of massive or for the market to worry about, it seemed. Did you see anything on that?
No, I was going to say, is that sort of 10-year auction, do the Fed get involved in that as well? I mean, obviously through their stimulus, they're buying the treasuries. So is that a separate one, or do they actually get involved with that? Because obviously, I think,
not sure.
To be honest, that's probably the only demand I'll see at the moment. They sort of like the government's sort of buying it, at these sort of rates. What is it, 1.5% on a 10-year?
Yeah, around that. Yeah, and I think the 10-year and US government debt in general is about 40% owned by other countries.
Yeah, I mean it is. It's just feels like a bit of a waste of money. We know inflation's more than 1.5%, although the powers to be don't show that, like we discussed yesterday. So it's just like sort of giving money away. So
1.5% is pretty good, isn't it? If you've got a lot of money to stick into it.
yeah.
For no risk.
I don't know. Is it?
Well,
if inflation's worse than that and the dollar looks pretty crappy, then I think it'll only be the sort of US people that would think, take the risk exposure out of it from the currency. I just don't think dollar looks very good either. So you sort of you lose 10% on the dollar over the sort of coming 10 years, and inflation spikes above 1.5%. It's just like throwing money away. I'm sure there's better places to stick it.
Maybe.
They need it. They need it.
Yeah,
If they don't get them sort of bonds bought, then how are they going to make their repayments on unaffordable repayments anyway?
that's
So
it.
pretty crappy.
Yeah, so Chinese stocks last night were a big outperformer, which I'm sure you'll come on to on your chart shortly.
Yeah.
There was some vaccine news out today as well, or certainly expected today. There is news expected about the Johnson & Johnson single-dose coronavirus vaccine today, and that is expected to be followed up with swift approval at the European Commission. Results from the late-stage trials published in January found that it had a 66% or prevented 66% of moderate to severe cases of COVID-19, and the EU has secured 200 million doses with an option for a further 200 million doses, although they aren't expecting those to arrive until the second quarter. Aside from that, and looking ahead, we have ECB today. No rate changes expected or scope of bond purchases expected either, but obviously people will be talking about the rising bond yields and whether or not the rising borrowing costs are a threat to the region. So all eyes on that come 12:45 today. Over to you, Steve, to have a look at the charts, and generally a bit more bullish on stocks yesterday.
Yeah.
What do you got?
Yeah, I mean, just thinking about that, it's quite interesting. I always used to trade the German Bund. So if that was well, German Bund, Euro Bund, if that was to make a bit of a comeback, it might be worth analysing that again. It's been pretty stayed for a long while now. Yeah, but on the whole, indices, FTSE, we can see here a couple of positive days, off to a negative start over the last hour. It always seems to happen in this hour between 8 and 9 o'clock. We have a sort of adverse move. But as we said on the 4-hour chart, we're seeing this potential continuation pattern, inverse head and shoulders continuation pattern. Not proper inverse head and shoulders, but one that's in the uptrend. On the 4-hour chart on the DAX, it's looking really good. Maybe just topping out a little bit at the moment, but I think it all seems to be pointing towards, after sort of breaching this potential double top, we can get rid of that now, them big fat arrows, maybe even redraw this line here, because that really has to take into that top as well. So yeah, I think it's looks like the upside has really opened up, and everyone seems to be enjoying this nice little rally into the sunshine. So on the weekly chart, we've got a bit of an expanding wedge on that DAX, and we're heading up towards the top of that, which comes in around about just under 15,000. That's sort of like a nice round psychological number to target maybe for the rest of the week. CAC, again, that's looking towards, pushing towards them. Pretty sure their all-time high is 6,123, only 120 odd points away from that. So looking pretty good there. Dow new all-time highs, trading at the moment 32,400. Lovely. Looking to buy dips in that, obviously. Nasdaq is the only one really struggling from that perspective. On the daily chart, where a potential head and shoulders formation, it just doesn't seem to be gathering any momentum at all. In the obviously we posted a bullish engulfing candle, but then a doji candle yesterday. So again, I think the Nasdaq has a different story to play out. I would be more inclined to be, if I wanted to invest in the indices, be more inclined to be long of Dow and S&Ps rather than Nasdaq. Maybe even use Nasdaq as a bit of a hedge if you wanted to take a little bit of risk off. Yeah.
Not often it's a case the other way around. You want to be long with the,
especially in the in sort of like, you know, recent times.
Yeah.
Obviously the S&P popped its head below this.
I was going to say popped its clogs.
Popped its head below this upward trending support line, and then clawed its way back. So that looks still pretty solid. I'll leave the line there. Obviously it could be redrawn if we do get a break of it, but I do like these swing low, swing low, swing low here, retest, and then extend onwards. You might get some resistance coming in on a shorter term, maybe around about just above 4,000, and the 4,000 is the number that we've been talking about for a while in the S&P. That's a big psychological number. I feel now it's opened up. It's ready to test it maybe this week. As you mentioned, in the Far East, we got the Aussie 200 is battling away with this upward trending support line, but it's managed to hold above it. Yeah, bit of a rejection, and also supported by this previous swing low on the 26th of Feb and the 5th of March. So that looks pretty good and could extend higher. The Nikkei, again, got a few lines here. We've got this intermediate bullish trend channel and the bigger bullish trend channel. And we're having price action just a little bit sideways. Looks quite supportive momentum now, not as negative as it was. China, don't know what this is doing in here. Oh, that's what we thought could happen last week, isn't it? Bullish hammer, sort of inside candle yesterday, so not really anything. And then we've had the extension upwards this morning. So a bit of a relief rally in China. As you see, we've sold off quite a decent percentage. Where's the little measure? I mean, that's like an 18% sell-off we've had since the 18th of Feb. So pretty aggressive. So there needs to be some sort of correction, then to allow a further retest of the downside. So and the Hang Seng a little bit similar. Again, it sort of feels like it's painting a little bit of a head and shoulders formation. Little way to go before we get confirmation of that. On the commodity side of things, crude oil, again, it sort of held a bit yesterday and looks like it could start to extend higher after a couple of negative days, the bearish dark cloud, followed by another bearish day. We've got this previous swing high, 65.21. We've got another one here coming in at 66.53. So that candle there on the 8th of March punched its way through all those levels, but rejected quite aggressively. So, and we've still got bearish divergence if we look at the MACD on there. So, in a bullish channel, medium term, longer term still looks good. Shorter term, be a little bit wary of that. On the gold, now gold, quite excited about the gold move. Now, if we look on the daily chart, we've had the bullish engulfing candle on the 9th, followed by a new high and a nice, lovely green candle, and got off to a great start again this morning. So we've had a nice little bounce back in the last sort of 3 days of about 4%, which isn't bad for considering what we've gone through with gold recently. On the 4-hour chart, I've got a bearish channel, which we're looking now to retest. That comes in at 1762, and that level around there is quite interesting because it will sort of line up with this swing low from the 30th of November, and obviously we've got another swing low in the middle of Feb, and when we went through, we retested that level. So 1760 to 65 for me would be a temporary target, and maybe even we'd get profit taking coming in there.
Like
this, yeah. I mean, we picked this out yesterday, but it just hasn't. I ran out of time on this. It just didn't do it yesterday. But it's
great call,
extending highs. Yeah, it's looking nice from that bullish flag formation. That's a targeted move up to 1753. I did buy this yesterday after the call, and I just covered it this morning. Really, just
happy days.
Yeah, so that was something nice for a change. Silver, we've broken above 26.11. Again, that's a little bit of a resistance level. Now will become support, and 26.28 as well. So silver looking quite nice for a continuation of this move to the upside. Really on the back, I suppose, of just the dollar sort of fading, the treasuries fading a little bit as well. So all good news for the precious metals. Copper I think, is the only other one which was seeing a little bit of a correction. I think it may have broken that, yeah, downward trending resistance line, and maybe a retest before continuation higher. Copper is a good one to be in.
Cool. Thanks, Steve. Let's have a look at some FX then, shall we? Okay, so first up, looking at the sort of overview of currencies, and yesterday it was a case of everything moving higher against the dollar. So the dollar continued its pullback. It's continuing its pullback yet again today, down by another 0.3% so far. If we look at the dollar index on its own, then we can see we had this break above resistance there at 91.60, which we keep referring to, but now we are testing that today, after a pretty decent pullback. So is this going to attract any buying interest? Are we going to see a retest of this sort of bottom pattern or cup and handle pattern possibly before a renewed push to the upside? I've got a little bit of a band of resistance in here that I've drawn between 91.30 to 91.63, and we're right in that now.
And
below that and we've got a 38.2 fib level at 91.25. So not sure. Waiting to see really on that one. I'm sort of quite tempted to think that maybe the dollar index may have a bit of a bounce here, but we'll have to wait and see. Of course, that's on the daily chart.
To sound like Ian.
Yeah, I know. Well, I mean, there is a bottom pattern there, right?
Yeah, there is.
I can see that, and there was, a break of a big wedge that we talked about as well. So, going back to maybe there.
Yeah.
So, we broke out, retested, pushing higher. Maybe we're
nice,
pushing higher who knows?
It's just the momentum of the last three sort of days. You sort of it's to stand in front of, to try and catch a falling knife is. I'd like to see some sort of short-term reversal before getting involved in that. You know what I mean?
I've kind of picked out a level today that I'd like to have maybe have a look at. This is the hourly chart, so sort of zooming in really, to try and finesse the entry. But I've picked this level here, 91.24. As maybe a level to have a little bit of a look at. Is it marry up with any fibs? Not really. Sort of just in front of the 50% of this move higher. So we'll wait and see. But looking elsewhere, it's all looking much the same. So we've got Aussie yen continuing to move higher. We've got Aussie dollar. Drew on this yesterday, maybe a bit of a top pattern forming, break of trend. Maybe we're going to see a retest somewhere around here. Again, obviously be dependent on what the dollar does. Euro was continuing to trend lower. Euro sterling is back around these key supports that we mentioned. So we posted this decent looking hammer candle, but we haven't seen any follow through, and we're now pretty close to retesting that 85.39 level. A little bit of a bounce and a bit of indecision around those lows, so maybe that will hold. If it doesn't, then I think we see a continuation lower. Euro yen continuing to move higher. Yen continues to be weak. Not really much to be said about euro. As you can see here, euro much weaker against the New Zealand dollar. Euro dollar, inverse of dollar index. We've talked about the bottom pattern in dollar index. We've got top pattern in euro dollar. Testing this resistance here at 1952. Maybe a little bit of an overshoot potentially before maybe a deeper correction down on that one. So not giving up on the potential of a top pattern having formed here and a bottom pattern having formed on dollar index. Over to sterling, still obviously very strong against yen. On cable, we've seen a decent breakout of a wedge there. We talked about that yesterday, and we have seen a bit of follow through to the upside on that one, and it remains within this bullish channel. So sterling continuing to look good against the US dollar. Looking at a couple of the Kiwis, obviously looking strong against Japanese yen, and similar to Aussie, maybe a top pattern taking shape here, looking for maybe a retest of the underside of this broken trend line. We will wait and see. Further downside on dollar CAD and dollar Swiss. rallied into a 38.2% fib level, posted a decent looking easy for you to say, bearish engulfing candle on the 9th of March, and we've seen a bit of follow through on that to the downside. And the one that I keep coming back to is this dollar yen trade, for a number of reasons, really. If we look at the sort of daily chart that we have here, we've banged right into a resistance level there. On the shorter term time frame of this swing move here, we've got an 88.6% fib level. We've posted a bearish looking candle there, and struggling to see it move any higher. So I think this has got some decent potential on the downside still. And if we move on to the gun to the head from yesterday, we can see that we had a couple of winners. Steve, you had a 1.14R return on gold. That obviously could have looked quite a bit nicer had you held on beyond the 9 o'clock expiry that we impose on these trades. But we also had a 1.13R return on dollar yen. So decent couple of days for us on that front. I'm not sure I've updated this actually, but we have ticked higher to that point there. So 96.36%. Steve, have you got a trade idea that you fancy today?
Yeah, I have, but maybe
if you want a bit of time, I can go.
Yeah, you go. I just wanted to talk about like the government bonds for a little while.
Okay, I've got something to talk to you about on that as well. But this is my trade for the day, looking at dollar yen, going for a hat trick of trades on this, and hopefully a hat trick of wins. So this is the intraday chart. We've obviously just spoke about the daily. I'm going to set it right here. Or am I? Don't like that on the intraday chart. There was something else I liked. Oh, it was DAX actually. I'm gonna have a look at DAX. So scrap that. I'm not doing a hat trick of trades on dollar yen. I'm going to look at DAX. So DAX is this is probably quite stupid really, because obviously it's trading up at its highs. We've seen a fantastic breakout here to the upside. Maybe a little bit of stalling on the intraday chart, certainly some bearish divergence on the RSI, and in the last hour or so we posted a decent-ish looking reversal candle. I often like to use the 10-period exponential moving average as a bit of a trigger to sort of highlight a shift in momentum. Maybe we're going to see that now in a bit of a corrective move down in DAX. Clearly the overall trend is bullish, so quite simply looking for a corrective move lower on this today. It's currently at 14,544. I'm going to place a stop loss above the highs at 14,606, and I'm going to target a pullback to retest this support that should now be in place following the breakout to new highs that we saw on the 8th of March. So targeting 14,192. Nice. That's my trade of the day.
Cool.
You got one then? Bund.
No, I haven't. But I'm just sort of interested in the Bund. I obviously mentioned it this morning. Didn't really think about mentioning it. I just brought the chart up. But let me just draw it in. Yeah, quite a complex looking inverse head and shoulders formation. So
oh, now you like bonds, dear.
Yeah, I do. I'm sort of thinking, look at this again, this sort of like right shoulders, like nice rounded pattern sort of, and we've got this quite decent level here, which seems to be a bit of a, what's that, 174.44.
Well, it looks like there's a bit of a range there, right?
Yeah. So but then what do? It's an hourly chart, sort of like, looking for maybe the ECB coming out today. Are we going to get slam dunk back to 173.50, or are we going to go break out of this range and start to target around about the 175 level? Just looking at the 10-year, not great. Let's get it off here. 10-year yields, German 10-year yields. Fancy that? Negative.
Yeah, selling
0.338. Obviously, we've sort of like seen what that's done over the sort of like years. I mean, I was trading this back in when we had decent rates.
Back in the good old days.
The yield was like 1.5%, 2%. I didn't even understand yields back then. Okay, just wanted to sort of highlight that. So
I'm going to come back to that in a minute once you've done
okay.
your trade.
Right, no pressure. What we're looking at here.
What's
This
that
is a
candle you
weekly
got
chart.
there?
No, that's a weekly chart. Ignore that. There's a lot of things going on. Why is that weekly as well? It's all gone wrong. So for me, gold can't really buy it here. Could look to sort of fade this move, but I don't really want to because it is gold. Let's have a little look at the dollar index. So dollar index straight away for me looks a bit toppy. Sort of like broke through the neckline, had a retest. Yeah, it probably has done it. But and here we got this level here. This will be a bit of a vacuum between here and here. So yeah, it's already done it. So what am I going to do, Joe?
Right, you have a think, and I'm going to show you this chart that I've got. So this is I don't know what you think of this. So this is here a combination of Euro Stock 600, the FTSE 100, and the S&P 500, and it's a weekly chart. So I've combined all the markets together to form one price. And as you can see, all markets sold off as a result of the pandemic. All markets have moved very steadily higher in the recovery. So we've got a bit of consolidation midway through the move and then a continuation higher. But we are approaching the highs, the collective highs that we saw prior to the pandemic up here. Now, I looked at this from a Fibonacci perspective, and it was pretty much bang on an 88.6, which isn't very often used, but it's kind of, if it is going to work and we are going to see a retracement, it's probably going to happen around here. Mm-hmm. But more interestingly, down here, this is a comparison chart against the respective government bonds of each of the countries that we've got as well. So we've got the European government bond, the UK gilt, and the US 10-year.
Okay.
So we're comparing the equity markets to the bond markets. So when this is trending lower, then that is in favour of owning bonds. When it's trending higher, it's in favour of owning equities over bonds.
Right.
So we are approaching now arguably a downtrend resistance line where it's sort of becoming less desirable maybe to own stocks and maybe more desirable to own bonds. If this trend is going to continue in the form that it has previously, maybe we'll see a little bit of a pullback here, and soon will be the time to start thinking about shedding your equity positions, or certainly lightening up on the equity side of things in favor of owning bonds for a period of time. And if we look back to when we've seen sort of sell-offs occur in line with this, you can see here, well, let's go back to a few points here. Let's draw some arrows on here to make it a bit easier to see. So first of all, we got that one combined with that. So sell-off in equities.
Must be a way of just keeping the cursor as a arrow.
Yeah, there is, but I haven't got time for that. So yeah, these sort of all married up with sell-offs in equities. I mean, I don't know how it might be clutching at straws here, but I just
well, it makes sense, doesn't it? You sort of like you get to the treasuries, get to a certain yield, and then it just makes sense to have them instead of maybe the high risk of the equities.
Yeah.
So yeah,
and as you're seeing, there's a bit of divergence here. So each time this was moving to make new highs there,
like it. Yeah.
But then it was not the case there. And at this point here, we're sort of well under those highs, but this is also under the high as well. So
do you think that this sort of like fourth arrow that you've drawn down on the top chart, do you think that could basically be the final push? Because it does feel, I don't think, for me, it doesn't feel like equity markets or indices really just turn around gently and then move lower. There always is some sort of catalyst or some sort of event which happens just before that, which fakes everyone. So you'll have the sort of like all of a sudden new highs, blue skies, everyone piling in.
Well,
You know,
I mean,
the
what's
banks
going to
handle their long.
drive this higher? It's going to be, you know, the whole of the US are going to be armed with $1,400 stimulus checks. Where
Yeah,
are they going to put it? You know, people that are already, you know,
Bitcoin.
okay, well off, you know, or even not, they're going to throw it into the market to try and, because there's so much mania around it, isn't there?
Yeah, absolutely. Yeah. So
So maybe that's going to drive it higher into that sort of point there. We're going to get that new
yeah, it
high.
makes sense to me because I sort of think you have to have that where all the banks holding all the indices. Let's give it to the retail market and then let it collapse.
Yeah,
This
exactly.
is what
And
they
the
always
investment
do.
banks will be sort of backing out,
Yeah,
backing up the truck.
yeah.
Look
So
at that. That
yeah,
measured move there, following that consolidation and a breakout, actually has a measured move up here.
okay.
I mean, this price is irrelevant because it's a made-up price based on, you know, ETFs that I've
Yeah,
combined together. So we're just looking at it from, you know,
love it, love it. I like the theory behind it as well. It just makes sense to
something a
me.
bit different, isn't it? And just sort of digging
Yeah,
a bit deeper into these charts to try and highlight some opportunities, I guess. Anyway, does that give you enough time to find a trade?
yeah, absolutely. Bang on. I've actually got euro sterling. I'm buying it now
Okay.
because of what you just said. Not because of what you just said, but just because I quite like this looks like a bit of a bottom. We've had bullish engulfing, bullish hammer, and a really nice, almost a Marabuzo candle nearly. A little bit of a pullback just for me to get into this lovely little trade. Getting long at, let's get rid of it, 85.75. Really, the stop on the trade should be 85.45. And let's have a little humdinger of a target, 86.65. Why not? That's what I'm at. Euro sterling. I bought it. Now let's
Good.
see what the central banks do for me.
Yes, okay. So 12:45, we've got the ECB rate decision. We've then got a press conference at 1:30. No change in policy expected, but the recent move in bond yields is expected to cause some comments by policymakers. So we will continue to watch that. Beyond that, at 1:30, we've got US initial jobless claims. Steve, we've waffled on for quite a bit already today, so I think we should just wrap it up there, unless you've got anything else to add.
No, no.
Lovely.
I think all the chat is saying, "Boo, get off! You're boring
Yeah,
us."
probably. Yeah, well, I'm going to keep an eye on this chart anyway, and maybe continue to come back to that. But yeah, good
Yeah,
luck with your trading today, and we'll be back tomorrow morning.
Okay, mate. Cheers.
Bye bye.